Hey everybody, this is Lawrence with Financial Thing. We have a very special video today for you, which I hope you're going to really love. We have Paul Auger here, who is the Chief Operations Officer for Kuflink. He is to my, that side, to my, trying to point the right way with my fingers. He's next to me right here, coming from the Kuflink offices in Gravesend, near London. How are you today, Paul?
I'm very well, thank you, Lawrence.
Good. Great. Thank you for agreeing to do this. What we're going to do today is something that I think is really important. We're going to walk through the process of how Cufflink selects a loan deal to be okayed and put on the platform for you guys out there to invest in. We're going to go through those steps and just show you really what it takes to really screen a deal from start to finish and get it onto the platform and get it completed. So more importantly, so Paul has graciously agreed to do that today, and we're going to get started. So Paul, let me ask you very quickly, what was your background? How long have you been working at Cufflink for?
I joined Kuflink just over a year ago now,
Okay.
and I've worked in loan management since the late 80s, predominantly in mortgages, secured loans, a short spell in unsecured loans as well. But my background is working for mainly lenders, obviously on the credit risk side of things, and obviously just protecting the assets and the money that we lend out to make sure the lending game is a very simple game. It's very easy to lend money, but the real art is actually getting that money back. So that's the challenge that every lender has. I was brought on board here at Kuflink a year ago. Kuflink's has gone through, and it will continue to go through a little bit of a reorganisation over the last year to bring it far more up to speed with technologies available. We are using more and more technology nowadays to help our decisions and make our decisions more accurate and concise. But we are going through a process of growth, and obviously to make sure that growth's in a very sustained manner, we need to bring a lot more policies, procedures, and actually a roadmap of where we need to go to.
Perfect. Okay. So what I have asked Paul to do is to show me one of the deals that is actually live on Cufflink's platform right now, which if you want to follow along and you want to take a look at this deal, it is the Alhambra Road P04 deal, which I'll put a link to in the description in the YouTube so you can follow along and see how this deal actually came to be on the platform. But starting out, so we're going to begin with the application process. When a borrower, and let's presume, Paul, that this borrower has not worked with Cufflink before, because I know you're going to have repeat businesses and you probably have different ways to do deals. I would imagine if you've done business with somebody many times. But let's presume this person is brand new. You've never loaned any money to this person, so they come to you. What is the very first step that somebody would go through?
Good question, Lawrence. When the applications come into us at the initial stage, most of the deals that we receive are presented to us by brokers. So the broker will have had a pre conversation with the borrower just to get an overview of what they're looking to try and achieve, whether it fits within the sort of realm of the type of deals that we are happy to fund. So they'll sort of pre-screen that inquiry. The inquiry would then be sent through to our new business team, and the new business team would do a sense check on the deal. They don't get involved too much in the in-depth underwriting of that deal, but they'll just look at the overall structure of the deal to see that that's the type of deal that, yes, meets the criteria that we're able to lend to. So they'll do some investigative work, maybe online, maybe on planning portals, some indicative work to see that the valuations that the customer is talking about are reasonable and fair, just to make sure that we're sort of not wasting our time, but also, as importantly, we're not wasting the borrower's time, because we want to make sure the information we give is accurate and correct. Providing that all meets our sort of criteria that we're looking for, we would then issue a decision in principle to the borrower via their broker for their consideration. And that would include, obviously, the indicative terms of the loan that we're going to be offering in terms of the rate we're going to be charging the borrower, the loan term that we're willing to obviously lend for, and also the security that we're going to be taking over the property.
These brokers that you work with, how do you find these brokers?
There's many of them around the country, and we have an internal sales team, and obviously we have two guys out on the road that will be going and meeting with these brokers to do not vetting as such, but when we take a broker on board, we want to make sure that they're actually doing what they say on the tin. So we'll visit them in their offices, do a little bit of due diligence to make sure that they are who they say they are. Mm-hmm. To actually present the business to us, they have to meet a criteria themselves as well. So we don't just accept business from anybody. They'll have to go through a certain criteria. They need to be authorised in some instances by a regulatory body. They need to be registered for Data Protection Act. So there's certain things that we need to make sure that the brokers are adhering to. And before we even accept a deal, we will actually do our due diligence, and we'd have an onboarding process with a broker, a little bit like, I suppose, with a borrower. We'll onboard the broker in the first place to say, yes, we're happy to accept business from this broker. At that stage, that's when we invite them to send us business through. But the whole premise of the way that a broker works is that they would, rather than a customer approaching us directly, if it's not a deal that is really our sweet spot, rather than going to 3 or 4 different lenders, the broker will actually say, I think this really fits the model of what Kuflink are looking for. So they'll hone the brokers. So the broker will hone the customer's time down to actually make it cost effective and time effective for them.
Okay, so Paul, after the broker submits the inquiry to Kuflink, you're going to do sort of this pre-screening. Obviously, you don't want to waste too much time and resources going into a loan that you may not end up doing. So you're doing sort of a pre-screen. What is the next step after that?
So the decision in principle would go out to the broker. Hopefully, the decision in principle will be a positive. But if we really don't want the deal in the first place, we will then send them, thank you very much indeed for presenting this case to us, but it's not one for us. But assuming it's a positive reaction, we would send out written decision in principle to advise the borrower, yes, we're willing to lend this amount of money. These are the terms that we want to lend them under. This is the loan term, the interest rate, and just the general terms of the actual agreement that we're going to ask them to sign up for if they wish to proceed to the next stage.
I would imagine that not everybody comes back to you, right? Even if you do present them with an offer. Do you tend to find that a good high percentage of them don't come back just because they're shopping around?
The percentage that comes back varies on broker to broker, but we'd never expect all of the deals to come back. And that they won't come back for a whole host of reasons, because the customer may feel it's more expensive than initially thought, and they may not proceed with the project in the first place, or it may be they're thinking they can get cheaper terms elsewhere, or not just cheaper terms, different terms or more money. So there's a whole host of reasons that stops a application actually turning into an inquiry turning into an application. And probably one of the biggest reasons is about like somebody going out to buy a car. They'll look at an awful lot of cars before they choose one to buy, but some people won't end up buying a car at all because they realise the whole thing is not viable. We'll get that in, especially in the development industry, where people will be offered a project. Somebody says, oh yeah, buy that house, knock it down and build some flats on it. All sounds very easy and very simple, but when you start to get involved in the mechanics, it's not as simple as people may think, and it may be not as profitable as people believe.
So after you give them the decision, let's say with this Alhambra Road project, they came back to you and said, yes, we definitely want to do this. What is the next step?
So the next stage would be an application pack to be issued to the borrower for completion, and that will have lots of information in there to allow us to actually underwrite the deal and really delve into how the deal is going to be structured, and obviously that all the different facets of the application to make sure that we're happy and we can conduct our due diligence as efficiently as possible rather than keep having to go back for further information. We'd also ask for proof of identity as well, because obviously fraud prevention is a very big part of lending money. So we want to make sure that we are actually dealing with the people who they say they are. We will then delve very deeply into the deal. Firstly, we'll do that on the basis of the borrower or the prospective borrower, and whether they be an individual or a limited company. We would do credit searches. We would do general searches in the marketplace online to make sure there's no adverse information about the borrower previously. We would do identity checks with that borrower or for that borrower. And obviously we then start looking at the structure of the deal and does it actually make sense to do the deal? And ultimately, we're there to protect our investors' money. It's hard-earned money they've entrusted us to obviously administer for them. So we want to make sure that once we lend the money out, we're going to make sure we're going to get it back.
Very important
Yes.
part of the equation, right? Because you're not just lending Kuflink's money. I know you guys do lend your own money into deals too, but you're also lending people's money. So
Yes, and that's exactly the way that we do it now. We invest in select deals ourselves as well. So it's a case of we want to make sure that every deal is done, and we treat every penny that we lend as our own money. And that's a very, very important part of lending. And sometimes if you're looking at a deal and it's a grey area deal, I was always taught in my 30 odd years of lending that ask yourself a question mentally. If it was your own money, would you lend this person money? And if the answer is no, don't change your decision because it's somebody else's money. Have the same values and view that you're lending your own money to make sure that you're very confident that you're going to get that money back.
You mentioned that you do certain background searches. Do the credit people within Kuflink just do general internet searches too? So do they perhaps get on Facebook? I would imagine that's a pretty good way to find things about somebody, right?
They'll use as much information as available. Obviously, we have some things that we do that are very industry specific, so credit searches, bankruptcy searches, all the sort of the usual due diligence that we conduct for people taking out a loan. But we also do very generic searches. And as you say, with the explosion of social media, more and more data and information has become available to us now. We have to be very careful, though, that we don't cross the lines of the Data Protection Act, so that obviously we're only using information that is available to us, and we make sure that we use it for the right purpose. There are protections for people. No, it's freedom of information, but also people have the right to make sure that we're treating them fairly and the information that we get is accurate. Once we've passed that stage and we're in the position that we're happy with the deal as presented and we're happy with the status of the borrower and the due diligence conducted on the borrower, we'll then move on to the next stage of the application, which will be to instruct a valuation of the property, and that valuation may take the form of a automated valuation, so an online valuation from a specialist company, which is a company called HomeTrack, which is the largest company in the UK, and they're most mortgage applications nowadays done for high street lenders for residential mortgages. A large percentage of those nowadays are carried out by AVMs, and they're all conducted by this particular company that we use. They are the market leaders. They rate properties in terms, they give every property not the property as such, but they give it a rating between 1 and 7 in increments of 1.1, 1.2, so they're going the whole way through the spectrum, and we would only accept a valuation on that basis if it meets our certain criteria that we're looking for in terms of accuracy of the valuation report, so we can tell that from the score that it's given. We would only do that on very simplistic deals, so bridging loans or very, very not development loans and not ground up. They would always have to have a valuation instructed with a valuation firm that would go out and instruct the valuation to them. They would go out and give us a full report on the value of the property in its current state, and also the value, if it's a development loan, the value of what the expected finished article is going to be, because that's an important part of the process for us as well.
By the way, who pays for the valuation?
Borrower pays for that.
Okay.
And also they'd have to pay for any other subsequent reports that are needed following the valuation. So once we conduct the valuation, we'll get the report back. Our asset management team, which are sort of a sub-team, if you like, of the underwriting team, they would actually use their experience and their knowledge to actually look at that report and work out, do we need any further reports to be carried out by specialist people, environmental reports. If the valuer says, I suspect that this property may be in a flood area, then we may well want a report to verify that it's not. So there's other process that we go down, the route we follow while we're underwriting the deal. When we're totally happy that the deal and the security offered to us fits within our criteria, we would then issue the heads of terms, which would be the more formalised details of the loan that we're going to offer, as opposed to the decision in principle. Excuse me. And that would then be sent out for the borrower to sign and return to us. Once that is signed and returned to us, that would give them the opportunity to ask any further questions. That heads of terms would just really detail all the terms of the loan that we're going to be in a position to offer. Once that comes back to us, we'd then move to instructing legals. Again, we'll use a panel of lawyers that are retained by us to work with us, but the cost of that is again added to the customer's account. We will then ask the borrower for the details of their solicitor, and our solicitor will only start moving forward with the legal work once they've confirmed that they're indemnified against the costs and the borrower's going to cover the costs, whether the deal proceeds or doesn't proceed, because not every deal that gets to that stage proceeds. There'll be things that come out in the legal side of things that we're not happy to lend on.
And those legal costs can get quite expensive, right, for somebody on the borrower side?
They can be. We try, and obviously we're not in control of those costs, but we do try and keep those costs to a minimum, but they can be quite expensive. A lot of it depends on the complexity of the project. Obviously, a development loan will be more expensive in terms of the legal costs, but also a development loan would be more specialised. So we have a panel of firms that we use. Some firms we'd only use for more simplistic things because there's a lot more detail and experience that you need from a lawyer when you're getting involved in development loans.
So after you present this formal offer, they decide to go ahead, you get the legals done, everything gets laid out on paper. What is the next step after that, Paul?
Once they've sort of the lawyers are very, very happy with the legal due diligence, we'll then let them liaise with the borrower's solicitor in terms of when they're looking to draw down the funds, whether that's day one money to actually start a building project, or whether that's money to purchase a property or to refinance a property. The loan will then be ready to complete. We will liaise with our lawyers to work out the date that the money is required. We then obviously put our lawyer into funds by transmitting the money across to them, and they will only release the money once everything's perfectly in order. Once the loan goes live, it's then taken over from our underwriting team, pass control of that deal over to our loan management team. And the job of the loan management team is exactly as it says, is to manage the communication between us as the lender and the borrower throughout the life of the loan, whether that be 6 months, a year, 18 months. The loan management team will correspond with the borrowers throughout the term of the loan to make sure that things, if there was any conditions that were set on the loan that need to be completed after we've released the money, it may be that something needs to be done within 3 months of the actual funds being released. They will make sure those things are done by regular contact with the borrower. But also we use project management surveyors that are instructed by Kuflink at the customer's expense that will go along and do a further valuation of the property, but also they do a status update on where the project's going. Now, if the borrower said, yes, we're going to build 2 houses and I'm going to do it within 12 months, and the project manager goes out after 4 months, that they've not even put a spade in the ground yet, it's probably highly likely they're going to finish within the timescale. So we try and pick up the errors that could occur as early along in the process as we can to mitigate any risk to any of investors.
Just backing up a little bit. So when is the deal actually put onto Kuflink's platform?
The deal will go onto the platform prior to it being completed. So it'll go on there to invite people to reserve that deal. So they're invited to put their investment in at that stage. It will actually go live on the platform as a funded deal, obviously, as it says, when the deal is funded. Sometimes the deals aren't always fully reserved by the time we actually release money to the borrower. So Kuflink will actually forward fund that deal themselves. And obviously, as investors then invest their funds into that deal, we'll get repaid, not because we want our money back, because we need that cash flow to be able to put into the next deal.
Have you had a case where you've put a loan on the platform that wasn't fully funded by the people? Maybe they looked at the deal and go, I'm really not into this deal, where Kuflink had to step in and provide the funds permanently for that?
To date, not permanently or fully, but you do have, and that's one of the things that our underwriters look at. They know, experience now tells them the type of deals that fund on the platform. So they will, and that forms part of our loan selection criteria. We know the sweet spot for our investors. We know what's practical in terms of what we're able to do. So that's a case of we're looking not just to underwrite the deal from a borrower's point of view, but we're also looking to underwrite the deal from the perspective of, we've got to fund this on the platform. Now, if the deal's just not the sort of deal that's going to fund on our platform, then we're best off turning it down in the first place.
Right. And then also there's two different sides of lending on platforms. So you have the select, which is where people pick out their own loans, and then you have the auto invest. How does Kuflink decide which loan goes into which side?
That's really down to the head of risk, the chief risk officer. They will look at the deals at the time that they're sort of coming to fruition in terms of funding, and they will decide whether they feel it's best suited for select or it's best suited for auto invest. It doesn't mean that a deal, and sometimes if a deal's on select, we can actually have them in both, so they can go on to select, but at some stage later on they can move into auto invest as well, which means that you can have a mixed bag of people invested in that deal. Obviously the auto select people will retain the terms of the auto select they've chosen. Also, if there's a shortfall that needs to be picked up, we can fill that shortfall up by allocating it into the auto invest.
So the deal that you sent me information about with this Alhambra Road deal, is that located in Southsea? Is that correct?
That's located in yes, it's
I think it's in Southsea. Okay.
Yes.
So, important question. You obviously have a limited team. That I would imagine it's not realistic to have somebody from Kuflink running out to all these deals, checking on how it's going. So you use this project management surveyors, which I'm presuming are third-party companies. Is that correct?
Yes. We don't just use one company. We use a number of companies, and they're nationwide. Mm-hmm. Before we take them on board, again, we have to, same as a selection of a broker, we onboard them, so we carry out our due diligence on the company to make sure they're qualified to do what they say they're doing. They have the right business ethos and business practices that fit within what we're trying to do as a business. And also, we need to test their integrity. So we do some background checks on them as a company to make sure they've not been involved in anything they shouldn't have been involved in. Because, again, as you quite rightly say, Lawrence, they are our ears and eyes on the ground. Albeit we do spot checks, and we have a asset manager in-house that will do spot checks on some of the sites up and down the country, but they're not as regular as the project management surveyors that will go out. And the project management surveyor would go out every time a loan needs a further drawdown of funds. So the development loan, where we lend a certain amount of money day one, and then there'll be an amount of money drawn down as building work progresses. Every time a new request is put into us for drawdown of funds, a surveyor will go out to do the report to make sure that the work has been carried out that they said they were going to do. And also we'll use the project managers if we suspect that the project's not going to be finished on time and we need to get a sort of an update of the situation to know what we need to do and take the next best stage.
So they're going to come back to you with these different stage reports and say, we think the project is maybe going to get delayed or has run into some issues. At that point, let's just say, one of these projects does run into problems that the surveyor thinks is an issue. How do you guys handle it from there?
Obviously, it depends upon what the issue is. Some of the problems may not be anything to do with the borrower. It just may be circumstance. Obviously, during COVID, that was a massive circumstance that no one could foresee. The other issue we get is weather. Weather's a great changer of things, and we
in
have
the UK, no. Surely not.
Well, at least we don't get the storms of the
hurricane
parts of the world. Exactly. But it's a case of we try and work with the project management surveyors to make sure that they're on target. If they're not on target, we will then try and discuss with the developer what steps they can take to try and rectify and get it back on target. So we try and give a little bit of, not advice, but a steer, because ultimately we want to make sure that as many of these projects finish within the timescale they've said, so we can obviously return the investment back to our investors.
Ultimately, after all of those steps are taken, hopefully the project gets wrapped up, the construction of the project is completed, or whatever, the building work is done, the renovations are done. The project then, I would imagine, is put up for sale by the developer, and then you get paid back.
There's a whole different way of people exit the loans with us. Now, there can be, as you quite rightly said, there may be some people just buying a property to do some very light refurbishment with a view of putting it onto a longer term, fixed term mortgage with a bank or a high street mortgage company. So that's one exit route. The exit could be sale. Obviously, that's another route to go down. Or it could be to refinance to another company that do more specialised development. We do get situations where someone will approach us to buy some property, whether it be commercial, semi-commercial or residential, and their view, at the moment, we get a lot of developments where commercial property is being turned into residential. Some of those projects may be not really suitable for us long term, but we're very happy to get involved in the early stages. We'll lend the money in the early stages to get the project going, and then another lender will come in at a later date and take over ownership of the project and obviously make sure that we get our money back.
I think that's a really good overview of these different steps. I mean, I've counted 15 different steps just on this conversation. I'm sure there's more that goes into every single one of these steps, but I think that gives people a really good overview of just what goes into getting a loan to the point where you're happy with it and up on the platform, because I know you're not putting anything on the platform that you don't think is going to be able to be completed and finished, and I think that's
and we ask every single member of staff, Lawrence, that are involved in the process of treating it as though it's your own money. So if a deal comes in, would you honestly lend this person or this company your own money? If the answer is yes, then it should progress to the next stage. If the answer is no, don't even bother going any further, because if you're not happy with it, why should Kuflink expect investors to be happy with it? So it's a case of, if we're not happy with a deal, we treat everything, and there are certain deals that are very much black and white. No, yes, we should definitely do that one. No, we shouldn't do that one. But they also get a number of deals that sit on the fence, are very grey, and we always look at it from a point of view of, right, let's look at the positives on this, but also let's look at the negatives and make sure that would the person looking at the deal, would they lend their own money to this customer? And if the answer is no, then let's put that one in the bin.
Deal, yes. I love that. I think that's such an important point.
We turn down a lot more deals than we actually accept, for a whole host of reasons, but the percentage of deals that are actually accepted is quite a small percentage of deals that are presented to us in the first place.
Well, Paul, I think we've covered a lot, and I think that gives a great overview to what you guys do over at Kuflink. I really appreciate you taking the time. There you have it. It's Paul Auger. I want to get your name right, because I was going to say it completely the wrong way. Chief Operations Officer over at Kuflink. If you want to go check him out, There's a link in this description below. You can sign up for a free account, go poke around the platform, look at the user interface, by the way, which has been improved, I think, massively. That was one of my big things that I didn't like about Kuflink was the user interface. I thought was a little confusing. I think you've cleaned it up really well. So, yeah,
And
go check it out.
We are constantly looking at improving that, and our investor relations team are always keen to hear feedback from investors for enhancements we can make to the platform, Lawrence.
Thank you again, Paul, for taking the time to do that.
No problem
and
at all.
if you guys have any questions, always reach out to Kuflink. They're very open to talking to you and walking you through things if you don't know how to do it. So thank you again.
Lovely.
Appreciate that.
Thanks for your time. Have a good day. Thank you.
All right.
Bye-bye.